And let's just talk about the 40-year security that Amazon came to market with, and the amount of duration that's come into the index this year. The amount of duration is increasing, yet the index is increasingly tight. Help me work through that.
Well, so I think what that is telling you is that the companies are making the right decision. That is, debt is very, very cheap, and therefore extending your duration as much as possible, as much as you can, is something that you should do. The real question is, why are investors buying it? And I think the reason investors are buying it is because they have no other choice. So for any portfolio that needs long bonds, the government bond market doesn't give you enough yield, and therefore you go in the corporate bond market to get that yield. It's really that simple. We can make it complicated, but it really isn't.
It's a 40-year security, 1.45% over treasuries. What were your thoughts on it?
So when you think about Amazon, Tesla, or any of the disruptors that are out there in the market, we find those challenging from a fixed income perspective. They have tremendous promise in terms of future profits, but they don't have a lot of profits today. So if you think about Tesla, it's a very large holding in our convertible portfolios. We like the upside-downside ratios there, but we passed on the most recent deal because we didn't think we were being paid enough for the risk. So I totally agree with your other guest. It really is a credit by credit decision. And for some of the disruptors, you're better off on the equity side or the convert side than you are on the fixed income.
Let's talk about that, Matt. You've hit right on it. It's an equity-like dream. It's captured by the equity. It's not going to be captured by the debt. The most you can hope from the debt side of the story is just to get repaid. And if you look at the performance of Tesla since that issue came out, actually that issue has been absolutely hammered. So it makes me wonder why people were buying into it in the first place at the kind of levels they did, Matt, when so many people warned about it.
Yeah, again, there's a lot of things to like in the Tesla story, and I'm certainly not going to talk about the motivations of the other buyers. But at Calamos, we take a very bond-by-bond, very heavy credit-focused approach, and you really have to look at the risks versus the rewards. And again, for a lot of these new issuances, they're just not in balance.
Subhadra, many people have come out and they've talked about cautioning what's happening in the credit market, maybe some complacency. The Federal Reserve often likes to come out and talk about valuations, but they usually talk about stocks. Should they be looking a little bit more about what's happening in the credit market?
I think they look across the spectrum on a variety of products. They look at commercial real estate, they look at auto loans, they look at what's happening in credit markets. And a lot of the Fed speakers have alluded to the fact that financial conditions are extraordinarily easy right now with the rally in equities and the tightening of credit spreads. So that's something that's definitely on the top of their mind when it comes to tracking financial stability. And this is something that we'll be looking for in Yellen's speech later this week when she speaks at Jackson Hole, because that's going to be the centerpiece of her conversation.